You can characterize Bitcoin as a digital currency. You can call it digital gold. You can call it digital cash. You can think of it as digital money. You can think of it as digital property. You can think of it as digital capital. You can think of it as digital energy. You can think of it as a digital asset. And it spawned out of the quote unquote cryptocurrency industry. So a person on inspection, if you've heard about it for a few minutes or an hour, your immediate reaction is cryptocurrency. Crypto is some kind of digital something, and currency. It must be a currency. And people go back and they say, well, it must be a currency because the front page of the white paper said a peer-to-peer, electronic cash system. And so most of all the debates and the criticism in this entire industry are just about semantics and words and interpretation of words. And oftentimes people will just hear one of those words, and based upon their life experience and what they learned in school or what they've learned in business, they will immediately come to a conclusion, which is either an economic opinion or a political opinion or an academic opinion, without first stopping to discuss what the words mean and even if the words are relevant. For example, peer-to-peer. Well, what's a peer? Well, a Bank of Japan is a peer of Bank of England, right? So maybe Satoshi meant it was a peer-to-peer system to move a monetary asset between the central banks or between commercial banks or between Apple and Google and corporations. And if you interpreted the peers as megacorps, mega commercial banks, or countries, you would have a different view than, peer, that just means a consumer like me, and I want to send $5 to my friend, and that means Satoshi meant Bitcoin was to send $5 between 8 billion people, peer-to-peer, right? And of course, if you think the latter, you have a totally different opinion of whether it works or doesn't work, versus if you think the former.
Michael Saylor, founder and executive chairman of MicroStrategy, argues that people misunderstand Bitcoin because they misinterpret the terminology used to describe it. Some view it solely as a digital currency, missing its potential as a digital asset class. Others criticize its volatility compared to established stores of value like gold. There are also concerns about government regulation. According to Saylor, these misunderstandings stem from trying to fit Bitcoin into existing frameworks. He argues that Bitcoin's revolutionary nature requires us to evaluate its merits as a new technology. And in this video, he explains exactly why. Let us now watch Michael Saylor as he shares his point. Give this video a like to show your support and subscribe to the channel to always be updated with the latest crypto news. Thanks and enjoy.
Maybe Bitcoin isn't digital currency at all, right? Digital currency, probably the best example of a true digital currency or close to it right now would be a tether, a stable coin. And if I could move a stable coin, $87 worth of it at the speed of light on a crypto rail, no KYC, no regulatory controls, with complete privacy, that feels like digital currency, completely private digital currency. Okay, so now if I say to you, well, do you like Bitcoin? And you think, Bitcoin, the digital currency? Well, then you might very well answer like, a certain politician answered a few years ago, like, no, I like the dollar better. Okay, because you thought that Bitcoin was competing with the dollar, and you thought someone was asking you whether we're going to replace the dollar with Bitcoin. So if you think it's digital currency and you think the euro, the yen, the dollar are currency, then the implication is, well, we're just going to replace the currency of your nation, whether it's the dollar, the euro, or the yen, or the CNY. We're going to replace it with Bitcoin. Now you end up with the entire establishment, every establishment politician, most bankers, most traditional economists pushing back and resisting it. And the politicians will resist it because nobody wants to collapse the dollar. It's a source of American strength. It's probably worth trillions of dollars a year to the US. So obviously we know why we like that if you're an American politician. On the other hand, if you're a classically trained economist, you say, the dollar, it needs to be stable and we need to be able to inflate the currency supply and everything's priced in dollars. And so that's a reason for classical economists to dislike it and criticize it. So you can see how simply by choosing the word digital currency, I will get a negative pushback reaction. Now, if I roll the word to digital gold, well, a lot of times you go to 1,000 rich families and you say, hey, do you like Bitcoin? It's digital gold. And they say, oh, well, that's interesting. I don't own any gold. Okay, name me one billionaire that ever made $1 billion investing in gold. There isn't any. Well, gold's defective. I could tell you why in 2 hours, but what does it matter? The point is we fixed it with Bitcoin. Everybody can say, okay, well, so I suppose you fixed something I didn't like. It's a crappy commodity. And so good for you, but I don't own any. Okay, so that takes you a different path. Now, let's say we change it to digital property. Okay, well, you want to buy $1 billion of Bitcoin. Oh, it's digital gold. No, I'm not going to. They're going to 6102 me. I heard the government seizes gold when it gets to be too much. You think it's gold and you're afraid that the government will seize it because it backs the currency, because that's your historic mindset. If I say to a wealthy person, you want to buy $1 billion of property? Where? Miami Beach? Yeah, sure. How about New York? Yeah, sure. How about London? I guess so. How about $1 billion of digital property in the greatest city in cyberspace? Seems okay. If you went to Donald Trump and you said, hey, I'm going to invest $1 billion in digital property instead of physical property in LA, he'd probably say, yeah, that's fine. You have the skeptic saying, oh, it's too good to be true, the government will ban it. But no one ever said the government will ban a building. And so if you think it's property, it just becomes a very straightforward proposition. If you think it's gold, I call it the good, the bad, and the ugly narrative, Guy. The good narrative or model is Bitcoin is digital property. The bad model is Bitcoin is digital gold. The ugly model is Bitcoin is digital currency. And it all comes down to the word, and you won't get past the word before someone comes right back over the top and tells you what they think. My last point is I can sit in a room of billionaires and I can say, if I said Bitcoin's digital currency, every one of them flinches and says, I know that's not going to fly here. And I can't come out against the real, the peso, the dollar, the euro, the CNY, the whatever. Okay. So all you got to do is say that and you get immediate no. Or I can say, yeah, they go, well, what's Bitcoin? Why should I buy it? I said, I bought it because it's digital property. It's the greatest city in cyberspace, and it's limited to 21 million blocks. And I think one day every rich person will want to live there, and every other person, everybody with money. And you know what they say? They go, oh, no one ever explained it that way. That makes total sense. Yeah, I get it. Yeah, I'll buy some.
Michael Saylor views Bitcoin as digital capital, not digital currency. He believes it's a scarce asset, similar to real estate, and its value will appreciate significantly in the future. Just like real estate has a limited supply of land, Bitcoin has a finite number of coins that can never be created. According to Saylor, this scarcity is a key driver of its value. As demand for Bitcoin increases, its limited supply creates a situation where the price is likely to rise over time. Saylor says that people misunderstand Bitcoin because they view it as a replacement for fiat currency. This, according to him, leads to unnecessary debates and anxieties. People become concerned about volatility or its impact on existing financial systems. When viewed as an alternative asset class, Bitcoin can be evaluated based on its potential for long-term growth rather than its immediate impact on daily transactions. Now, here are more insights from Michael Saylor.
It's going to get exponentially harder, right? This last week, you saw Block announce that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world. And they're all in a marketing war with each other. And so they're going to go harder. So I think, and at some point, you're going to see these Russell 1000 companies, right? Which one of them wants to crawl out of their zombie state? It's like, you're just waiting for someone to decide they want the money. So I think that when they do that, they drive up the price of Bitcoin and I have to chase it. My first Bitcoins were below 10,000. And, and I'm buying Bitcoin in the 60s now, and that's okay. I don't know where we'll get to. I know we'll get more. We'll accrete from here. We will acquire more Bitcoin than we have right now, and we'll do it via organic cash and via debt, especially convertible debt, and we'll do it via equity, and that'll be a function of capital markets and all sorts of other dynamics. But I think Archimedes said, "You give me a lever long enough and a place to stand, I can move the world." Well, the the place to stand is Bitcoin, right? I mean, it's not a commodity; it's a scarcity. So if it's a scarcity, it's like if I said to you, "There's one city. It's at the trade crossroads of the world. It's the center of the digital economy. One day, everybody on the planet's going to be moving their capital through that city, but there's only 276 by 276 by 276 blocks in that city. And by the way, it's like 94% occupied, but you can buy another one of those blocks if you want. Do you want to buy some more?" And the answer is, yeah, I want to keep buying, because just like if I could have bought New York or Manhattan 100 years ago, or 50 or 200 or 30 or 300, tell me, at what year, how many years ago was it a bad idea, right? I think it's always been a good idea. If you can hold, right? There's $900 trillion of capital or wealth in the world, and I think there's 1 trillion in the Bitcoin network. So 0.1% of the economic wealth in the world has found its way into digital property. Most of the people don't have an hour to talk. Like most of the world, I'm sure Charlie Munger never listened to a 2-hour podcast on Bitcoin. So most of the wealth in the world is in the hands of people that don't really understand what Bitcoin is. And a lot of the advocates of Bitcoin, they have been intentionally confrontational or inflammatory, and they've gotten into a bunch of other debates. Like, does Bitcoin stand for, replacing banks or replacing currency or replacing government or replacing whatever? No. What is Bitcoin? It's digital capital. What's the addressable market of digital capital? Somewhere between 100 and 400 trillion dollars. So what is Bitcoin? It's 100 to 400x from here once you understand what it is. So what's the impediment? Well, I mean, the impediment is just education.
Do you see any potential downsides to Bitcoin becoming a more mainstream asset class? And if Bitcoin isn't a replacement for fiat currency, what role do you see it playing in the future of finance? Feel free to share your opinions in the comments below and continue the discussion. Don't forget to give us a thumbs up and subscribe to our channel for more insightful discussions on cryptocurrency and finance. Your engagement helps us continue providing valuable content to our audience. Thank you for watching. Stay tuned for more videos as we go over the latest news in crypto finance, technology, and everything in between. Until next time, happy investing.